One decision, 500 billion euros, and a risk that could shake the entire European continent.
Germany has taken the unprecedented step of suspending its debt brake to launch a $500 billion investment package aimed at revitalizing its economy. Germany plans to invest heavily in infrastructure, including high-speed rail, bridges, and broadband networks to stimulate economic growth. A significant portion of the $500 billion package is dedicated to green energy, including offshore wind. Germany has allocated significant funds to state-level budgets to ensure local governments can maintain services and stabilize regional economies.
The investment package also targets struggling industries with direct funding to preserve jobs and maintain production.
Germany's $500 billion plan could reignite growth or pose new risks. The world watches closely as Germany takes on massive new debt. Investors are beginning to question its long-held reputation for financial stability. For years, Europe's weakest economies have relied on Germany's strength. If Berlin still stumbles, when financial crises strike Europe's weaker economies, Germany quietly steps in as the lender of last resort, preventing collapse behind the scenes. If Germany can no longer support Europe's financial system, the crisis could spread rapidly, threatening the stability of the entire continent. Germany's recovery now depends on speed. If projects are delayed, the cost of failure could be catastrophic. As borrowing rises, Germany now faces tens of billions in annual interest payments, squeezing its federal budget. As bond yields climb, investors and rating agencies are now questioning whether Germany's creditworthiness can remain untouched. Japan rebuilt from ruins after World War II and achieved rapid growth. Germany, already developed, faces far smaller gains from new investment. Germany's central bank warns that real economic growth from these investments may not appear until 2027 or later. In advanced economies like Germany, new investment improves existing systems rather than creating entirely new growth engines. If interest rates rise further, Germany's investment program could collapse before growth ever arrives. This is not just emergency spending. Germany is abandoning decades of fiscal discipline and adopting a state-led growth model. For decades, Germany relied on exports to power its economy. That model is now being replaced by domestic investment and state planning. Once Europe's strict guardian of budgets, Germany is now leading the continent through massive public spending. Germany's experiment will test whether massive state investment can still revive growth in advanced economies. If the gamble succeeds, Germany could create millions of jobs and pull Europe back into sustained growth. If the plan fails, Germany could lose its credibility and drag the entire European economy into crisis. What Germany does now will shape Europe's economy for the next decade. Success or failure will echo for generations. Behind every billion euros spent are workers whose jobs, skills, and futures depend on this gamble. Germany's success depends not just on money, but on retraining millions of workers for a new economy. Germany's famous apprenticeship system now faces a critical test as the economy rapidly changes.
Germany's population is aging fast, and without enough workers, even massive investment may fall short.
To fill labor gaps, Germany may need millions of new workers, but immigration remains politically sensitive. Without cheap and reliable energy, Germany's factories cannot compete, making energy independence a matter of survival. Germany's green transition will reduce costs in the long run, but in the short term, it adds pressure to households and industry. Rising bills will test public patience, and without support, political backlash could threaten the entire plan.
As reforms deepen, political divisions widen, and public resistance could slow or derail Germany's recovery.
Germany's coalition government may not survive the political backlash, putting long-term reforms at risk. As Germany spends, the rest of Europe must decide whether to follow peers or prepare for turbulence. Seeing Germany spend, Italy and Spain face pressure to follow Poland, even as debt fears resurface. With Germany spending and Southern Europe fragile, the European Central Bank faces impossible choices. Tighten too much and Europe falls into recession. Loosen too fast and inflation returns. As uncertainty rises, global investors are quietly reassessing Europe's role in the world economy. If confidence fades, the euro itself could come under pressure, raising costs and risks across Europe. If Germany succeeds, it could rewrite economic thinking for rich nations struggling with slow growth.
If Germany's gamble fails, governments worldwide may abandon spending and return to harsh austerity.
Europe now stands between two futures, one of renewal, the other of decline. Germany must now choose whether to lead Europe through uncertainty or retreat into caution. Years from now, this moment will be remembered as either Europe's renewal or the start of its decline.
Behind the headlines are numbers that reveal just how fragile Germany's recovery really is.
Germany's growth can only come from a few sectors, and none of them are easy to expand quickly.
Manufacturing built modern Germany, but saving it may cost more than ever before.
Germany's auto industry faces its greatest threat in a century: electric cars and Chinese competition.
Germany's heavy industries now face a brutal choice: pay high energy prices or leave the country. Germany's Mittelstand, its small and mid-sized firms, are being squeezed from every direction.
As risks rise, German banks may tighten lending, threatening to choke off recovery.
High rates have frozen construction, deepening Germany's housing crisis and slowing growth.
Government projects could restart construction, but delays and costs threaten the rebound.
Germany is late to the tech race, but the new spending plan could change that.
Artificial intelligence could boost productivity in Zukunft or simply repeat past tech disappointments. Germany fears automation will destroy jobs, even as it desperately needs more workers. Germany's recovery will not be even, and some regions risk being left behind. Outside major cities, weak infrastructure limits productivity and fuels resentment. Money alone won't save the economy. Success depends on trust, speed, and competent execution. Without faster approvals and simpler rules, Germany's investment surge could collapse under its own weight. Germany is racing to digitize government, replacing paper delays with digital speed. With hundreds of billions at stake, transparency will determine whether trust survives. Rising defense budgets are creating new industries, but diverting resources from civilian growth. As Germany ages, healthcare costs rise to bleed, quietly consuming future growth. Fewer workers must support more retirees, forcing Germany toward painful pension choices. At some point, someone must pay, and tax reform could become the next political battle. Big spending creates winners and losers, and inequality could widen before growth returns. If the costs feel unfair, political anger could overwhelm economic reform. Germany's choices are reopening old European divisions, and unity is being tested. Without alignment between Paris and Berlin, Europe's engine begins to stall. America's subsidies and tariffs are forcing Europe to fight back, even against allies. Germany's prosperity is tied to China, but that dependence is becoming dangerous. The world is breaking into blocks.
and Germany must adapt to a harsher global order. For decades, exports powered Germany's rise, but the world that made it work is fading.
If exports fade, Germany must finally rely on its own consumers to drive growth.
Stronger wages could revive growth tingent or reignite inflation Europe fought to contain. With wages rising and growth fragile, the ECB's next move is anyone's guess. Bond markets will deliver the first verdict on Germany's gamble.
A single rating decision could raise borrowing costs for years to come.
This gamble will not be judged quickly. Its results may take 5 years to appear. Economic reform takes years, but elections demand results now. A change in government could unravel years of economic planning overnight. If everything works, Germany could enter a new era of sustainable growth.
If the gamble fails, Germany could face a decade of stagnation and social fracture.
In moments like this, history rarely rewards those who choose safety over responsibility.
Europe's future will be shaped not by plans alone, but by the choices made every day from now on.
Behind every reform statistic is a person trying to adapt to a changing economy. For small business owners, reform is not theory Kuwait, it's survival.
For Germany as youth, today's decisions will shape decades of opportunity or debt.
Without new workers, growth will stall Matans, but integration remains the real challenge.
For things. Germany's economy cannot grow faster unless more women can fully participate in work.
Automation could solve Germany's labor shortage, but change work forever.
Without new skills, investment alone cannot create a new economy.
30 years after reunification, Germany still runs at 2 different speeds. Growth is clustering in cities, leaving rural regions behind.
Without affordable housing, growth brings pressure instead of prosperity. The green transition promises savings tomorrow, but higher bills today.
If green power stays expensive, German industry risks losing ground. Europe is building a carbon wall to defend clean industry from dirty competition. Germany is no longer racing alone. The US and China are sprinting ahead.
Germany creates ideas but struggles to fund them at scale.
A true capital markets union could unleash trillions in European investment. Germany's banks protect stability but may be choking innovation. Eurobonds could stabilize Europe, or permanently divide its politics. Solving Europe's crises may require less sovereignty and more union.
Europe cannot move forward unless Germany decides how far it is willing to lead.
Even the experts disagree on whether Germany's gamble will succeed. Germany has placed its bet, but history has not yet revealed the outcome. These are the indicators that will reveal whether the gamble is working. The first signs can mislead. Early wins may hide deeper problems. International investors will decide whether Germany remains a safe bet.
In economics, perception can matter as much as reality.
When people believe the future is brighter, they act, and growth follows.
When trust collapses, fear becomes the strongest economic force. Germany has faced decline before and found a way back. Choosing not to act is still a decision for Pristina, and it has consequences.
An economy is shaped not only by laws, but by millions of everyday choices. Long after the headlines fade, history will judge what was done in this moment.
The next decade will reveal whether Germany's gamble becomes a model or a warning.